always asking a question. They're not necessarily an answer. There's simply a question there. What do they do with this? What do they do with this? What do they do with this? What do they do? And every one of these is simply that question. What do they do? So when we've got a level or a key or an RGL, these are all the same thing, aren't they? They're all a specific price area. What do they do with that price? So the price comes up to the level. Do they then sell it? What do they do with that price? What do they do with that liquidity? What do they do with that size of volume? When we get bad news coming out or good news coming out, what do they do with the bad news or the good news? Obviously, bad news or good news comes in the uprights here. We get this time reference rather than a price reference. What do they do with the good news? The good news comes out, the bad news comes out, whatever, and this is what happens. So we get a read off of that information, don't we? So we're always getting into these areas and we're always asking these questions. What do they do with this information? What are they using the liquidity for? What are they trying to find as a deal? Now, as I said, I'm currently in a short FTSE position and it's against the long S&P position. So I'm in good shape at the moment. I'm in very good shape. I'm losing a little bit of money on the S&P. I'm making a lot of money on the short FTSE position here. And against that, we've obviously got this underlying structure here, which is this buy trade here on the blue line. So I bought the blue line in here, way too far discounted against everything else. You can see that for yourself. So it was very, very straightforward for me to buy the S&P and sell the FTSE. We're making a lot of money, as you would expect. The pound is premiumed at the moment. So because of that, that idea is that we should always make more money on the short sell on the FTSE. And that's exactly what we're doing. We're making a lot of money selling the FTSE into this storyline at this point. Spread trading at its best. How many people just had a long equity position and are losing money? Not me. We had a spread trade. And that spread trade is making some very, very nice gains. Thank you very much. We could have scratched out the S&P for a break even here if you wanted to. No danger with that trade. We already recognized if 30 when offered, there was going to be a buy off the 25. There was a buy off the 25. It traded back up to 31s for 6 points. Beautiful. So that's a cracking trade, live room call. Challenge was too many buyers getting absorbed and then putting in that sell. And the sell's now pressed it back through to bottom edges again. As the sell presses it back through to bottom edges, it's key to now watch for reactions. Everybody on the floor looks for a reaction to something. If they run the stops, if they run the price, if they get the liquidity, what is the reaction? The reaction was very bullish here. This was the news. This was the news. This was also a wholesale price. This was also that perfect time of the day where reaction was very good, very positive. So you started out with this bullish idea of what the markets are doing. Agreed? But take a look at the top edge. Remember, it says at the bottom edge it's a bullish reaction, but at the top edge there still might be that inflation concept. So look at what happened at the top edge. So we had a paycheck top edge here. What did they do with the paycheck? What did they do with the paycheck? Did they buy it or did they sell it? Well, they sold it, didn't they? So when they sold the paycheck, now that calls this buy trade into question, right? It calls the buy trade into question here because we haven't seen that reaction yet. We've seen that reaction. We haven't seen this reaction yet. So when we then look at that as an idea, this is the whole concept about levels, keys, RGLs, volume surges, because these volume surges should come in at levels, keys, RGL, shouldn't they? So when we see that as an idea, we see this around the data, the news, and the sellers and buyers auctions, we simply put the tool sets together that allow us to make that read. I'm making a killing on that short FTSE position. Killing on it. A great trade. The S&P is hardly losing a penny. So you get an idea. When we read these as stories, it's about putting the reactions together. Just because we have a big buyer at 10 or a big spread trade at such and such isn't going to give us a trade. It's going to give us knowledge to then look to see how the market dealt with that order How did they deal around that price? What are they looking for around about that price point? Remember, we talked about that bearish spread. How did that trade turn out for oil traders? How many people took some sales off the 70? How many people took the top line liquidity and says, you know what, I quite fancy that calendar spread storyline. I might fancy maybe getting a bit of business against that calendar spread storyline. Somebody's putting a few $1,000,000 at risk on it. Why should I not put a 2 lot in it? Why should I not put a 5 lot in it? And all of a sudden, that calendar spread, 5 lot or 2 lot or whatever it is you're doing, suddenly seems to make a little bit of sense. Let's see how this guy's doing anyway in his calendar spread. He sold just above the $3 million mark, and currently it's trading at 2,980,000. So he's up about 20 grand since that calendar spread went on. He's up about 20 grand, or she's up about 20 grand at this stage. Not a bad trade, right? Not a bad trade for, for a throwaway just at the top edge there. But did that help inform you for your trading, knowing that there was a block trade there, that somebody was doing real money at that specific price area in those ratios? It does inform you, doesn't it? It certainly can't not inform you. Know what I mean? It's certainly something that's better than nothing. It's information that might lead to a trade idea. So if it's information that might lead to a trade idea, what happened? Well, if we look at the idea behind the oil, can we all agree that this was a price that we'd already highlighted at $92.50? Had I already mentioned this $92.50 level? Did we already know about that $92.50 level from this tweet from the 24th of September? This was the cash open high price on the 19th. $92.50, wasn't it? So that's the price we all knew about going into today's market. So if we knew about the $92.50, and then we run the liquidity pool at $92.50, and then we retest the liquidity pool at $92.50, are you starting to build an idea? Did we have any calendar spread divergence at $92.50? Yes or no? Kind of crazy sensational, right? So when we're selling at 70 and we've just traded at 10s and we've made $600, that's incredible, isn't it? I mean, when you think about it, that top line was 92.70 and this bottom line here was 92.10s. That is a very, very big profit, right? That is a very, very substantial profit in that swing, considering you're batting against the strong-handed traders. And if you're batting against the strong-handed traders, you know this is a tough challenge. This is a tough ask. Obviously, we've come into the 2 o'clock RGLs, which aren't on this because this is just the big board. But obviously, you'd want to be knowing about that as a process. Of course, you'd want to know about the 2 o'clock RGLs regardless. It's beautiful. And you just keep your charts up to date. 92.72s is now the liquidity pool. And obviously that brings in a flush at 92.75, doesn't it? That brings in a 92.75 flush into that top edges up here. And your charts are now up to date. You're ready to look at it. You're ready to focus in on it. We've now got a brand new liquidity pool in here. So we obviously just mark it, make sure your charts are up to date, which means that this price is what? This is a paycheck liquidity, and paycheck is very, very powerful. It's a big old magnet when you see paycheck sitting there. A lot of the times the market will go after that paycheck, right? So if we can get a rotation coming back out, we can run the squeeze. We're in pretty good shape. Very good shape. We'll be getting into this, of course, as we get into today's classrooms in a little bit more detail.